Vincenzo'S Go Crypto Investing, and we just want to diagnose, snip out, and detect. I've been talking a lot about a classic mountain double top, topping reversal pattern, and I just want to give you a little bit of a heads up on how this sort of all works and plays out. You can see what you got going on here is we got that white support box that's been underneath there for quite some time, and that's a major support zone. But then you got your double top, and you got your neckline, which is right there, right? The bottom of the neckline is right there. The actual start of the neckline is the top of that white box to the bottom, but the actual bottom of the double top neckline is where I just put that white support box. And we're going to get some of this nonsense and mumbo jumbo off here to straighten up this chart, to get some like that doesn't need to be there, that doesn't need to be there. We can move some of this down to our neckline, which is 28,097, right? And then we got the top of our neckline at 37,300 and change. Get rid of that, delete that. We're just trying to clear up this chart a little bit to make it look a little bit nicer, so you can see what we got going on there. And we've already diagnosed, sniffed out, and detected, and went over extensively on our prior videos what this double top is in and how it was formed. But you can see what you got going on here now is you got your top one and your top two for your double top. You got your neckline there. This is a double top often takes the resemblance of an M topping reversal pattern. That's why it's called a double top, right? Or an M double topping reversal, or a mountain top reversal pattern. And this is a classic mountain top where you have a huge pump, a crash, equally as great pump up for a magnificent mountain looking double top, and then it crashes. And you say, well, Vincenzo, how do you diagnose and sniff out the target and move out of that? Well, it's simple. All you have to do here on an M double topping mountain reversal pattern is, if you don't breach the old high and close, it's a valid pattern. Meaning, with our industry exclusive pointer tool, if you don't breach and close on this double top higher, like you breach the high and then close in the daily and weekly much higher, right? You back test the support and then keep going up. This immediately sold off. Every time it got above the all-time high, sold off within the same day, sold off within the same day, and then flushed, right? So how you do this is a classic double top. Now you're going to trade back to the neckline right in the here, this white support box, and then you come all the way down to the absolute neckline, which will probably be where the 200-day moving average trickles and slithers its way up to the neckline at $28,000. And the targeted move there is as soon as you breach the neckline and the 200-day, that's right there, but specifically the neckline. But I think the 200-day will be up here by the time the price comes down to there, right? You breach the neckline. See how the volume too, this is a classic. This is another thing you look at, and these will be coming in to my classes once I can get all my stuff on here on YouTube with being monetized and having that platform just right here for me. One of the things you look for is, you notice on this pump, this whole big pump from 10,000 all the way to almost 70,000. You had a nice volume spike to right here, but it didn't beat out this old selling, this old buying from back here. And then you notice since your top here, when Vincenzo started making videos right here, got rejected by the orange ring, volume starts to crash, price comes down. But then price comes down and levels off here where we showed you back here. If you watch the videos from April, May, June, July, and August on how this could turn around, we forecasted it to come here, so it came a little bit higher. But you notice the volume still declines. There was never another big volume spike to coincide with this nice pump in this rising channel, which tells us when we do get the volume spike to come back in, because eventually the volume has to come back in, it's going to be sell pressure. And to me, when the volume finally comes back in, is when you break this neckline, the volume says, oh shit, stop losses get hit. People that are borrowing money against their gains of the past couple of years start to get liquidated, and their margins start to get called, and then they got to sell some of their stock to pay off some of their money they borrowed, because they have to pay it back with interest. And when you're losing borrowed money, it makes pressure tighter. Tighter stop losses create more selling, because more stop losses get hit as the price goes on, and it's a feedback on itself until there's a liquidation event and a mass sell-off, right? And I think that is coming, but that's not going to come for a little while. And the targeted move until you break this neckline would be from the top of the head to the bottom of the neckline, and then to the point of a breakout, right? But this doesn't do it right because the price is so high, so we have to do it by a percentile move. And if we take our industry exclusive measuring tool out, from the top to the bottom is a 55% flush, right? And a 55% flush from the neckline is catastrophic, and this would liquidate everything. A 55% flush brings you right back to obvious underneath support where we mark this with our industry exclusive perching tool or our horizontal ray, and it brings you right back to the old high, bam, where you had all kinds of support and resistance when you were trying to break out after the big sell-off after the 2018 pump or the 2017 pump leading up into the January of 18 where you had the big flush. So this would be your targeted move from a neckline, right? A 50% flush from a neckline would get you just above the last line of defense, or AKA get my shit together box before the shit house, right? In orange, that orange box down there. And that's where your targeted move would get you, would all the way down there at $13,569. So that's what's going on here. You have a classic double topping reversal pattern and a catastrophic liquidation event where people get margin called, levered out because they're over levered into this crypto market, and they get fleece heisted and shysted as panic and mass selling will ensue as soon as you breach this neckline in the double topping reversal pattern. I'll give you more updates to go, but this is our long-term target for 2022 of $13,569. And then there could be an even bigger flush after that, but that's for another time and another discussion. But in the short term, we're going to continue trading down to that 28,069 bottom of the neckline, and then watch for the breach and a flash 55% crash to $13,591 as the stock market's getting nervous. I'm going to have a housing market update coming in as the December jobs report, the homes report, the home supply report, and the economic news for December is coming out. The Fed's tightening, and they're going to start their double tightening policy of getting rid of asset purchases. So we have a lot of things going on. I've been extremely busy at work, but I have a short 8-hour day today on a Sunday, double time money day. And then 5-6 o'clock tonight, I'll have a couple of extensive videos, a housing market update I'm going to get into, a nice 10-15 minute video, and then a couple 5-10 minute videos on the crypto on my nice laptop, right? I got my nice tablet that I bought so I can do beautiful videos like this while I'm streaming on the run, so you don't have to look at it on my small little phone screen, right? Like, subscribe, and share to Vincenzo's Go Crypto Investing. Peace and love. Peace and love.